Oluwole Adelokun, Associate Director, Strategy and Economic at KPMG Advisory Services, is joining me right now. Hello, Oluwole. Welcome to the show.
Thank you, Nancy. Happy to be here.
Now, let's get started. And I think I should start really by the question of the day that we got. I think Tamuno Seledi did send a question and say Nigeria has a GDP of $432 billion, which is a macroeconomic indicator. And can you say we are a poor country? And I tried to answer. I don't know if you listened to my answer. People are turning me to a professor on this show.
Okay.
You know, yes, my answer, or what do you have to say? What do you think?
It's an interesting question, but and your response was actually spot on.
Okay.
When you look at our GDP relative to our population, we're actually not really doing well compared to other African countries, the likes of South Africa, Morocco. You will discover, and I'm not even using a developed country, I'm using African country. In terms of GDP per capita, they are far ahead of us. One thing that is extremely important to note is that until we're able to double our population growth rate in terms of our GDP growth rate, we can begin to see...
Is it double population or double GDP growth rate?
Double the GDP growth rate,
yes.
We can't see the impact that we'll expect. So we hope that we should be able to achieve that. Until that is done, we can't expect that the Nigerian can be classified as actually a rich country.
Yeah. Stamuna, I hope you are listening, and I needed to bring that up for Oluwole to add more perspective. Okay, Oluwole, welcome again. Q1 has come and gone.
Yeah.
Turbulence? Oh, okay. For me, okay, let me say my word for it was turbulent. Or whether that was too extreme. But what one word would you use to describe the first quarter of this year for us, for the economy of the country?
I would say, if I'm to just describe it, like every year, the unexpected happened across various areas. But I would say overall, it's still early start. What we're likely to see as we go into the year will be defined by various variables and parameters. But we've seen the positive and we've also seen the negative. I think one thing I would just leave with regards to the economic on an overall basis is that the manufacturing producer index that try to measure the level of confidence in the economy is still above 50%. So people are still, Nigerians are extremely positive about the country based on that index, but there are still certain challenges, risks that we need to just manage in a proactive manner.
Okay, if we take a look at, I agree with you to an extent, to a bit of positives, but I think there were more downsides for us as an economy in the first quarter. And as a people, as Nigerians, I think it was turbulent. That was what I meant, because we've seen even other external factors affecting us, and even our own local factors, insecurity and all of that, which is not palatable news at all. If we take a look at the global economy, how do you think it played a part in the first quarter for us?
Okay, thank you. To respond to that question, I will summarize it into two major dimensions. One is the Russian, Ukraine crisis. The Russia decision to actually, invade Ukraine, and there are three main channels through which it actually has impacted the local economy. One is in terms of the impact on commodity prices, because Russia is a significant player when it comes to the energy value chain. The crisis metamorphosed into an increase in crude oil prices, which actually increased by about 40%, close to about $110 per barrel. And currently is around $100 per barrel. Now, for us, that doesn't translate to higher revenue, because of the subsidy issue that we have in the country. I would say the second implication or transmission mechanism for the country is in terms of agricultural products. We consume a lot of wheat, grain. Let me say, for example, in 2001, our total consumption of which was about 64.8 million metric tons. But how much is our production? Very significant. Out of that 64.8 million, we imported 64 million metric tons. So it resulted into what you would call imported inflation, which actually stood at the end of February at about 17.7%. And you could see the impact, in terms of the prices on commodities, especially agricultural-related commodities, in the country. I would say the second one from a global perspective is the rising global inflation rate, which has continued to tend upward. And that is driven by two things. Number one is driven by the fact that when you look at last year, there was significant stimulus package, used to support economy, various economies across the globe, and that accelerated recovery. But what then happened is that the volume of money in circulation increased significantly, and on the back of that, you see most economies, inflation rates tending upward. And given the energy price increase and the food increase as well, what IMF has told us is that about 60% of developed economy will experience high inflation rate this year, which is for US as at the end of February, it's about 7.9%, that's very high.
The highest in over 40 years.
40 years. Yes. That's significant. When you look at Canada, it's about 5.7, and then you look at other Europe countries. Now, because we're import-dependent economy, so you will see imported inflation. So that's how, the global landscape within the first quarter has impacted, the Nigerian economy. And the other thing to note is that because of the increase in, inflation rate from a global perspective, you've seen the central banks from developed, economies saying we need to do quantitative tightening, which means interest rate needs to actually go up. The implication for us as a country is that there will be capital flow reversals to develop economy, and that means the cost of borrowing may likely actually increase for us as a country. So that's how I would, characterize, from a two-way perspective, the implication of the global environment within the first quarter on the Nigerian economy.
Okay, now let's come down to the country. You've given us the external factors which impacted the Nigerian economy in the Q1. If we still stick with the Nigerian economy in the Q1, you will know that there were announcements, at least even prior to Q1, the finance minister they say, that we're going to be having fuel subsidy removal because the PIA was signed last year. Eventually now, nothing has happened. In lieu of that, we even saw fuel shortages, fuel queues. It's gradually gone down now. At least it's not as it was before. We saw power outages and all of that. What would you really say about that? It was really a chaotic Q1 for us, coupled with inflation, higher inflation in Q1, because our inflation now is just close to 16%. Yeah.
It's actually 15.7%
yes.
as at the end of February. Now, I will, you're spot on based on the way you've characterized some of the things that happen. Every year, there are certain things that are contingencies that you don't plan for that actually happen. But this year was what I would say, it was unexpected, turbulent, because people were thinking we're out of the COVID, induced recession, and then the Ukraine crisis came. Then looking at the Nigerian environment, certain things happened that was not actually the best for the economy on an overall basis. And I'll try and summarize those things in four dimensions. The first one is the continued pressure, on consumers that is actually eroding purchasing power because of high inflation rate. So the double digit is still here, and that was driven by three main factors, like you did mention. One is the hike in electricity price. The second was the fact that we enter into January and especially in February, the scarcity of the PMS, which is driven by the high energy prices, and more importantly, the high energy prices from a global perspective. Then we are confronted with the contaminated, fuel, that actually, wasn't planned for. So you could see the consumer pressure from an inflation perspective. I think the other thing that also came in is the point around the security challenge, especially in the northwest. We can see that repeated, in Kaduna State. Yes, government is doing a lot to actually manage that, but the indices that we're seeing and statistics suggest that food production in that region, especially from the northwest, is being impacted. The other thing I would say that also was a bit of a shock is the conversation around the electricity that actually impacted, businesses. Now, but all is not negative. We had some positive that I would say is interesting. One is around the PIA, which we've mentioned. Now, there have been conversation everywhere around, it has been suspended. No. From the insight we have, the implementation is being accelerated. Yes, there is a conversation around the subsidy that is being suspended. And I think given where we have from an inflation perspective and the potential implication of an increase in PMA prices if it's removed, which we saw, in subsidy, I think it will be significant. The labor and the trade union will not really be in support. So maybe for now it's a smart decision to actually manage that. So the point I'm making is that the implementation of the PIA would help to stimulate some investment in that sector, given what we're seeing. The second thing I would say is the positive is intervention by CBN. They've done extremely well in supporting SMEs. An example is the point around about, I think close to 30 billion was actually released to support SMEs. The real sector fund also is improving. More interesting is an indicator of the food inflation, which is still relatively high, but because the CBN has taken a decision to restructure the Nigerian commodity exchange, to offtake produce from farmers that are being funded, is actually moderating food inflation prices. So I would say we've seen those positive. That is also helping us to have hope, on an overall basis for the country.
Is it really causing us, is it really making us to have hope? Or it has made us not to fall so flat? I hope you understand my analysis. Yes, because earlier on, when you were also analyzing what is happening in the U.S., causing U.S. inflation about 7.9%, we saw so much helicopter money during 2020, 2021. Like you said, so much hot money right now in the system. Our own too, we saw a lot of helicopter money, especially from the monetary side, the CBN pumping billions and billions of naira into different sectors. If we take a look at our own Nigerian inflation, would you really say that we are suffering more of imported inflation? Or our inflation is as a result of the structural and logistical factors that supports, goods and services moving, producers or production lines and all of that is shaky? Okay,
thank you for that question. Yes, you're right. When you talk about inflation, it's basically when you have, a continuous increase in prices of commodities and goods. And it could be driven by two main factors. One could be demand driven. And when it's demand driven, it's coming from maybe, earning capacity has increased and people are now, consuming more. But I would say looking at the Nigerian environment, it's more of a supply structure, from a logistic perspective. We have some structural issues, that needs to be fixed. And that includes things around, our infrastructure, things around power. So take, for example, what happened even within the first quarter, where the price of diesel actually increased significantly from about 350 to 700. So that is driven by structural issue from an infrastructure perspective, also from a logistic perspective, which is being able to move, good from the from farm gate to the consumer head. And we can say the step being taken by, like I said earlier, by CBN to try and restructure the Nigerian Commodity Exchange to facilitate that movement of take, and then to the consumer end, is a step in the right direction. I think the ability to resolve those structural issues, will help us to actually slow down the inflation.
Mm. Okay, let's go to another matter. We've talked about inflation. We've talked about the global perspective to it. GDP, you alluded to it earlier. We need to grow, and even grow at double digits for Nigerians to really feel the impact. Let's take a look at Q2, the second quarter. What's the outlook? Because some of these things, or some of these conditions that we were affected with in Q1 are still there. They've not gone away. Insecurity is still there. Inflation is still high. Cost of living crisis. Many Nigerians are suffering right now. Our debt profile is very high, about 39 trillion naira. The political angle, which I would also want you to take a look at, the economic side of the politics.
Yeah.
So all of this is still, facing us right now in Q2. What's your assessment? Where do we go from here?
Okay, thank you. So as you think about Q2, you're right that some of the, the experiences and challenges that we had in Q1, some of them are still here. But as I reflect on Q2, certain factors will drive Q2, which are extremely important. One is around the inflation conversation. To what extent is the crisis, the Russia and Ukraine crisis, is impacting the energy prices would be very important. But I think there is, to some extent, hope, in the sense that if you look at, U.S. has made a commitment to release about 60 million liters of barrels,
yes. From their oil reserves.
Yeah, from their oil reserves. Not only that, the other members of the International Energy Commission, they've also committed another 60.
I think 120 million.
Yeah, so
yes, IEA.
Yeah,
yes,
altogether. So that will moderate, the impact, which for us doesn't necessarily actually translate to more revenue, but at least maybe to some extent it will reduce the cost of subsidy, which today the president has actually, like you reported earlier, sent a bill to the National Assembly to actually increase the size from what was in the budget was about 440 something billion to fund the subsidy from January to June. But now that has increased significantly to about 3.6 trillion. But if the U.S. and other international, the International Energy Agency is able to actually release more, crude from their strategic reserve, that will impact. Now, I think the conversation around election, as we know, about 1 or 2 weeks ago, the ruling party had their convention. The opposition party, which is PDP, is planning to have theirs in May, I think. Now, you will see a bit of spending. Some sector of the economy will actually benefit, whether it's you're looking at hotels, you're looking at restaurants, you're looking at transport. So it will more or less stimulate some activities, and then that will impact outputs. Though it could also have inflationary impact. I think the other thing that we impact Q2 and beyond is the conversation around our forex management. Because the increase in oil price is not translating, in crude oil price is not translating to more, revenue in terms of what we can accrue to our external reserves. We've seen a slight depletion, in that space to about, I think currently it stands at about $39 billion. Now, the CBN has signaled that going forward, as you go into the future, sale of FX to banks would actually be put on hold, which is similar to what they've done for DBC. So that means that you will begin to see a new, forex regime, within the economy. The details is there to be unfolded, but we should expect that based on the pronouncement and what I'll call the RT, 200.
200, yeah, the race to $200 billion.
Yeah, over the next 3 to 5 years. The last thing I want to say is that the conversation around managing our alt theft, is something that is extremely important. And I think there's a commitment from government side to actually, attack that. If we are able to mitigate the alt theft, what will then happen is that we should be able to get more revenue. We have capacity to do about 1.8 to 1.9 million barrels, but today we do between 1.3 and 1.4. It's significant is actually due to theft. So being able to address that will actually give more revenue to government. So those are the factors. But on an overall basis, like I did mention earlier, the manufacturing producer index seems to suggest that it's above 50. So there's still a bit of confidence. What is happening seems to show that it may not have significant impact from a global perspective on output, but there may be some impact on cost. So we should still expect, some sort of growth, but the growth will more or less be subdued, relative to what we had when we ended the year with about 3.98%, which is for Q4. Overall, we ended the year with 3.4. So as you look at Q2 and you go into the Q3 and beyond, maybe we'll be ending between 3.6 and 3.7 on an overall basis.
Which is not fantastic, especially for a country of 206 million people. We need to generate more growth than that. Now, you said quite a lot, and thank you for even saying that, because I penciled some things down when you were talking around oil production, around oil theft. I like the aspect of the IEA which you brought in, but how it may not necessarily affect us that much, because so much money is going into subsidy, and some of our crude is being stolen. I spoke to the executive secretary of NATI yesterday on the show, and from their report, it's there that about $2 billion worth of crude oil was stolen in 2020. That's so much. And even from the news this morning that I read, the GMD of NNPC is also speaking on that economic sabotage. If we take a look at all of this, what the federal government is doing, I'm also aware that the military has launched, and I can't remember what they call it now. It's an Hausa word, I guess. Something about Barawo to fight crude. Yes, to fight crude oil theft. If we take a look at that, do you see an improvement in the second quarter? That's one. Number two, our debt profile is 39 trillion naira. We're still borrowing. In fact, the finance minister at the time said that we're going to use Euro bonds to pay subsidy, which I didn't understand that statement. So that's two. Then how do we also address revenue challenges? That's three. Number four, I hope you're taking it, but I'll remind you. I just want to get everything out. Number four is the spending challenges or the spending concerns we have. Some people are of the view that we have a spending problem and not a revenue problem. So I want you to address that.
Okay, thank you. So, let me take them one after the other. The point around what do we expect to see in Q2, given some of the action that has been taken around, responding to the challenge around oil theft. I think we should be able to see a better Q2, and my thinking and logic and assumption behind this is as follows. Number one, I think the crisis with regards to the scarcity will be managed. I'm sure that government is sensitive to that, given that we are close to when in a period where you're thinking about winning or the election. So there will be some proactive response to manage that. The second thing I would say is that there is also a commitment from the Monetary Authority to actually ensure that businesses are supported. The other thing also that would also help is a conversation around ease of doing business. We've made some progress in that space, and the current PEBEC secretariat, they've done a lot in that space. Yeah, there's still more to be done, but as we ease the ease of doing business, I think that would also have positive impact. Being able to address the oil theft will also have some sort of significant impact because the revenue that will accrue. Now, as you then speak to the revenue challenge, you're spot on. Even when you look at our revenue performance within the first three quarters of last year, we just did about 3.41 trillion, if I get the figure right. So that means that we're challenged. But when you look at our GDP composition, it's actually well diversified. The performance that we've seen within the economy is driven by non-oil sector. So ability to actually, design a framework that will enable us to actually get more revenue and broaden the base will be extremely, extremely important. And that will be anchored by, one, the points around ease of doing business. Number two, being able to leverage digital platform to get more revenue in terms of collection. We also lessen the illegal, illegal deduction that we've seen. I think what is being done in PENCOM, if it can actually be replicated in terms of a creative solution to support the informal sector and get more revenue in that space, it will also help to enhance our ability to earn revenue. I think the last point I will mention is that if you look at what government has done, where on an annual basis they come up with a finance act that gives a sense in terms of the fiscal direction, for the country, and provide a sense of certainty. I think we need to move in that direction when it comes to investment as well. We need to begin to think about how do we attract or support investments, whether from local guys or from foreign corporates. And what has happened based on COVID, what has even happened based on what we are seeing with Russian invasion of Ukraine, shows that supply disruption is something that we need to be careful about. So we need to think about how do we, enhance production locally, and an example is Dangote refinery that is coming on stream. So the point I'm making is we must be able to design investment policy. Maybe if it is not annual, like the Finance Act, we can think about maybe every 2 years, where you review the legislation, you review current regulations and identify the roadblocks to investment, and then find a way to actually get those roadblocks out and provide confidence to attract investors that can bring in the capital and generate employment. If we do that, in the long run, we should be able to address the revenue challenge. So I don't know whether I've actually touched on all the questions.
Yes, to an extent, yes, you have. The issue of debt, so to speak, do you see it climbing more than it is now?
Okay. As I reflect on the landscape, in the short term, we may see and you alluded to it, the points around what the Honorable Minister of Finance said, and the fact that our subsidy now has actually, increased about 4 trillion. So in the short term, maybe we would see an increase, definitely, but we still have to find our way out of the crisis. But as we go into the future, and we're able to come up with creative solutions, and those solutions will evolve around, providing an enabling environment to attract capital will be very important. Generating significant investment will be very important. Maybe the other thing that can be considered is, government holdings in some strategic assets. similar to the LLNG model. The dividend that is being paid by an LLNG and even the contribution to the economy. So LLNG recently made a commitment to support the gas sector,
yes.
And enable the conversion around LPG, CNG. That could, is possible because it's being run professionally. So I think if we can replicate similar models,
along other national assets.
Exactly. That would also enable us to actually generate more value, and that value can translate to more taxes, more revenue, which eventually would then reduce our propensity to actually borrow more to fund infrastructure.
Okay. I'll come back to that in a bit. What other solutions? Because even while you were speaking, you've alluded to a lot of solutions. But I really want to know specifically, what are the kind of conversations that you and your colleagues have, with, I don't want to say customers or clients or Nigerians, because at least you work for a global firm. What are the kind of conversations that are being, within your rooms, the boardrooms and all of that, being said about Nigeria, about investment climate, about the economy? Do people still have confidence in the administration running the economy? Do people still have confidence that we may get out of the quagmire that we have right now? Do people still have confidence that Nigeria is Nigeria is a good place for business? What are the kind of conversations that you're having? What are the kind of things you tell people that ask questions?
Thank you for that question. So as we, have conversation with clients, with some of our clients, I would say that the feedback we're getting, to be candid, is that there is confidence in the economy, and I would say it I'll summarize it this way. We've had 2 recessions within a period of
2 years. Yeah, about 2016 and 2020, 4 years.
4 years.
2 recessions in 4 years.
That's, very, very. It wasn't expected, but if you look at the way the government, the authority, have responded in a proactive manner by coming up with various intervention fund by looking at our tax law and then reviewing that to actually enable businesses to actually invest more. And we've been able to deliver growth that is actually even more than what was forecasted by the likes of IMF and World Bank. So the feedback we're getting is that there is confidence in this economy. And like I said, data actually speaks to that. The PMI index, which shows that it's above 50, it demonstrates confidence. It demonstrates, hope in the economy. Now, being able to fix some of our structural issues will catalyze and accelerate that growth. So that's the feedback. But as we also advise our clients, one of the things we did also, we emphasize to them is that you have to do a scenario-based planning. Gone are the eras where you are saying, I have a strategy or an investment plan for the next 4-5 years. No.
It can scatter.
It can scatter. So you must be proactive. You must even be looking at your performance on a quarterly basis, if possible, or a review, and ensure that your strategy is scenario-based and is driven by that. So say, okay, if this happens, what will be the implication? What should be my strategic response? What will I do differently to actually navigate the environment? Do that. So that's another conversation we have. The other thing we've also said to a client is the point around, you have to be cost efficient. You must manage your cost in a proactive manner, given that we're in an era of double digits, and you can leverage several platforms, to do that. Digital platform is extremely important. So those are some of the conversations we're having with our clients.
And I hope that for those listening, that they're also picking or watching what Oluwole is saying, because I don't think why I asked that question also is not just about your clients, it's about even investment advice. So I hope you've picked that you shouldn't just plan 3, 4, 5 years ahead. You should also do scenario-based planning. When it comes to your investment and when it comes to your money, you can adjust every quarter or every 6 months and see, is Eurobond making money? Is this, to know where to put your money and all of that. I hope you've picked that. Just as we close very quickly, in the midst of all of this, are there drivers for growth? What drivers are going to take us there if we're anticipating growth this quarter or for the rest of the year? Very quickly.
Okay, thank you. As I round up, so there when you look at what drives growth, it can be classified into two main drivers. One is, if I go back to my economic days in school, you have the Keynesian model, where government actually be the driver and try to stimulate the growth, which is what we've seen, over the last few years by, the CBN and various intervention funds to actually support. But more importantly, what actually drive growth is private sector investment.
Okay.
In summary, private sector investment and providing that, predictability, providing that certainty, providing that, enabling business environment will be extremely important to actually stimulate the kind of growth that we expect.
Okay. Okay, I think we'll leave it at that. Thank you very much, Oluwole, for your analysis and for your insights today. I hope to talk to you soon.
Thank you so much. Thank you.
All right, I've been speaking to Oluwole Adelokun, who is the Associate Director, Strategy and Economic, KPMG Advisory Services. We've been looking at the Q1, that's first quarter review, and the second quarter outlook for Nigeria's economy. I hope that you've taken some nuggets and some bullet points away. That's the much we can take on today's edition of the program. I am Nancy Naji. Be the best you can be. Be that change that you want to see. I'll see you all again next time. Happy weekend and sorry for the Owambe. I'll see you all again.